that, picking the wrong line.
I was trying to tell you, but no one's listening to me. Can you, am I not coming through?
Yeah.
Are you talking, John?
Oh, we can hear
Yeah,
you, John.
can you not hear me? I told you it was Tom this week.
That's my plan.
Yeah.
Yeah, okay.
We hear you. We're just not listening
No
to
one,
you.
no one responded. I thought maybe my mic wasn't working.
Yeah.
It just weren't listening to me.
Very fortunate.
I'm sorry. Did you say something?
Pardon?
So funny.
Lou, you ready to start?
Not quite yet. I will be in just a second. Give me just 1 minute here, folks. It's 02.
Right, but that'll be in this year. Just sorry.
Okay, we'll go ahead and start, and I'll officially open this meeting, and John Nelson has our invocation.
Let us pray. Lord, we thank you for this group of men and women that provide fellowship and help us with our mission to help others, especially those at this time that are being impacted by the pandemic, and bless them and give them comfort and give us guidance and health and inspire us all to get our vaccine. Praying in Jesus' name, amen.
Thank you, John. Appreciate that. And Ingrid, can you bring up the flag for us, please? Thank you. And if you will, please join me in our Pledge of Allegiance to the flag. I pledge allegiance to the flag of the United States of America and to the republic for which it
stands, one nation, under God, indivisible, with liberty and justice for all.
Thank you. Just a couple of real quick announcements. The sign up for the blood drive, it'll be held on April the 8th, and you can sign up on the internet. And also on in April, I believe it's April the 13th, we're having our salt block meeting, and you'll need to bring chairs. And also we'll be sending out a notice for that meeting, and we need you to respond so we'll know how many meals to order, and lunch will be provided at that meeting. And now I want to turn the meeting over to Bill Lair. He has some Paul Harris presentations. Oh, wait a minute.
Thank you, President Lou.
Hey, Bill.
Yes.
I just messed up. I forgot somebody because I didn't get this in on my agenda. We need to have the Rotary connection first with Lindsay.
Okay.
Thank you, President Lou. Good afternoon, Rotarians. Thank you for being here. If you weren't able to make our meeting a couple weeks ago when we started these Rotary Connect circles, I want to give a quick overview as to why we decided to do this and implement this into our meetings. We all miss being together, right? We miss being at Lake Hickory Country Club and having lunch, sharing a meal together, really just engaging in informal conversation to get to know one another. We really miss that connectivity. And, you know, of course, we're thankful for the technology that enables us to continue to convene. However, it's just often not the same. And whenever it comes to making connections, and that's what we love, one aspect of Rotary that we love. And so we wanted to bring this opportunity, a brief moment each meeting to do just that. So what I'm about to do is I'm going to send you away to small breakout rooms. So you're going to be in a room with no more than 4 or 5 other Rotarians. I'm going to give you a prompt that you can use to discuss. You certainly don't have to stay on topic, but this just gives you an opportunity to hopefully learn something new today about someone, another fellow member of our Rotary Club. So I know there are a couple of you that are having some parties. So some of your meetings, some of your circles might be a little bit larger than others, but just be mindful of the time, if you will, so that everyone gets a chance to share. We are going to take 8 minutes for this particular segment. The only thing you have to do is to click to join the breakout room that I randomly assign you to. Okay. So the question, and we also had some discussion in our last meeting for you to have the ability to submit questions to discuss. And I love that suggestion. So if you have a question that you would love to discuss during one of these circles each meeting, I'm going to ask you to send those to President Lou. And we can incorporate them into our lineup of questions for future meetings. Does that sound good?
Yeah.
Okay, awesome. But today, it's another question that I've come up with. But this in particular, I think you'll have some interesting conversations that can spur from this. So what's an experience that you've had lately that you would rate a 10 out of 10? What's an experience you've had lately that you would rate a 10 out of 10? So I'm going to send you away to your breakout room, and I'm going to give you a 2-minute warning just to help you with timing. So again, everyone has an opportunity to share. And if somebody would take the initiative to sort of kick off the conversation and maybe call on each individual, so it's a smooth transition between each person. So again, what is an experience you've had lately that you would rate a 10 out of 10? All right, I'm gonna make our rooms here. We've got 4 to 5 participants per room. And so the only thing you have to do is accept that invitation, and we'll see you back in about 8 minutes.
Invitation.
Okay, I think everyone made it to their rooms.
Great. How are you doing?
Good. I'm recording. Hold on. Should I pause? I should probably just pause the recording right now, shouldn't I? Let me just do that.
Yeah.
Thank you.
Welcome back, everybody. We've got about 30 seconds before the others will join us. We just found out that Notions, Marie Geisley's business, will reopen on Tuesday. Exciting. As you're coming back into the room, use that chat box. What's something that someone shared that you found was interesting, or something maybe you want to try now as a result of them sharing? So use the chat. See if we can get a little chatter going on in the chat. Welcome back, everybody. Welcome back. Thank you again for being willing to try something a little new and different in addition to our meeting. As you come back in, let's see if we can get a little chatter going on in the chat box. Use the chat box to share something that you learned from your times, from your circles, your Rotary circles. So what is something that someone shared that was a 10 out of 10 experience that maybe intrigued you, or that maybe you want to try? I guess
Let me try it. I want to be John Leach when I grow up.
Wonderful. A hiking trail. Yep. We talked a lot about hiking in our group.
That seemed to be the same with us, a couple of hikers.
I was expecting someone to talk about the beach. Looks like a bunch of our crew has gone to the coast in the past couple of weeks. Well, hopefully continue to share. Got a quiet bunch. Continue to share what you have heard, but I'm going to go ahead and pass the mic back to President Lou to continue with the rest of our meeting. Thank you very much.
Lou, you're muted.
But, okay, now, Lindsay, thank you for that. Well, I have to do it now. How about that? Can you hear me now?
Yep.
Good. And Lindsay, thank you for that. And now we'll turn the meeting over to Bill Lair. Bill, you're on.
You muted, Bill.
I bet I'm not muted now.
Gotcha.
Okay,
We can hear you.
if I could get Paul and Lila and Lisa to come forward. And this is for all of you, but the Paul Harris Fellow is named for Paul Harris, who founded Rotary with 3 business associates in Chicago in 1905. The fellowship, which was established in 1957, expresses appreciation for a contribution of $1,000 US to the humanitarian and educational programs of the Rotary Foundation. These programs include an array of projects that save and invigorate the lives of people around the world and enhance international friendship and understanding. Foundation programs provide educational opportunities, food, potable water, healthcare, immunizations, and shelter for millions of people. These activities are funded, implemented, and managed by Rotarians and Rotary clubs around the globe. Rotarians also designate a Paul Harris Fellow to recognize another person whose life demonstrates a shared purpose with the objectives and mission of the Rotary Foundation: to build world understanding and peace. We move closer to a more peaceful world today as Lisa, John, and Camille all become Paul Harris Fellows. Lisa, you are being recognized today as a Paul Harris Fellow in special appreciation of the ways in which your life exemplifies the humanitarian and educational objectives of the Rotary Foundation. You were designated to receive this recognition by your parents, Paul and Lila. Paul, if you present her with the pin and the certificate. They can see you. Wide screen. Congratulations.
Thank you.
John and Jeff. John, you are being recognized today as a Paul Harris Fellow in special appreciation of the ways in which your life exemplifies the humanitarian and educational objectives of the Rotary Foundation. You were designated to receive this recognition by Jeff Mack. That's John and Jane Earl. And I'll ask you, Jeff, to pin the good luck. There we go. You got that?
Glad you're doing that.
Congratulations. Bill and Camille. Camille, you are being recognized today as a Paul Harris Fellow in special appreciation of the ways in which your life exemplifies the humanitarian and educational objectives of the Rotary Foundation. You were designated to receive this recognition by Bill.
Imagine that.
It's not easy. Thank you, President Lou. That concludes our presentation from Jeff Mackey's office.
Thank you, Bill. Appreciate it. And now we will move on to our program. The title of the program is An Update and Economic Outlook as We Emerge from the Pandemic. Our Rotarian Katherine Newton is presenting Patrick Bobbins for this program. Katherine?
Yeah, hey everybody. So glad you could all be here. I wanted to just take a moment to introduce Patrick to you, maybe for the second time. He was at the panel discussion that we had last year on markets and the economy. Patrick has been my partner for the past 7 years. He's in charge of all of the investment management of our clients' assets and also of our investment strategy, and we work very closely together with all of our clients and helping them with their financial planning and so forth. So I'll introduce to you Patrick, but I wanted to just take a quick moment before, I'm sorry, Patrick, that was you. Yeah, say hello.
Hello.
Yeah, just wanted to take a quick moment to just talk a little bit about kind of how we do some of what we do, and we can go on to that next slide if you'd like, Patrick. So just to say that when we work with our clients, and especially as Patrick and I have been working together, it's given me more time to really focus in and study some things and garner some new tools and so forth on helping our clients move through particularly challenging times in their lives financially. And of course, things like retirement, but also things like the loss of a spouse or divorce, or even the sale of a business or receiving money suddenly. Those things become very personal in nature. And so we feel that we're being of service to our clients when we really use some special tools and so forth to help clients take a look at the relationships and their emotions and their sense of well-being alongside the more technical aspects of money. And we do this not only because it feels good and it's great to sort of understand those aspects of our lives and as it relates to money, but mostly because it is the personal side of money that really drives decision making. And so we find that if we pay attention to these more personal aspects of money, that we make better financial decisions. So as we do some of this planning, we consider 4 stages of transition. And this model is really very good for helping to understand transitions of all types. And especially during this time of the pandemic, we have been working closely with our clients as they move through normal transitions like retirement and those other things. Normally in a transition, there's a period of anticipation. Retirement is a very good example of where we have some anticipation. So we are able to manage expectations around what retirement's going to look like and the kinds of things that we would want to do and accomplish and so forth in our retirement. But during the pandemic, we had no opportunity to anticipate what was about to happen. So we landed square in the middle of the ending or the event itself. And so for the past year, we have been really in this very different way of being. And so we feel like where we are with regard to the pandemic is right on the cusp of ending moving into a period of passage that might be 2 or 3 years long before we really emerge into something that is a very different way of living and being and so forth. But here's what I really wanted to share with you, that as we work with our clients on this more personal level, alongside understanding all the technical aspects of money, during this time, clients have been asking different questions and have been focusing in on things that are different than what they normally might have been doing. For example, it's very common for our clients to make bucket lists. There's nothing wrong with the bucket list. But what we are hearing during this time of pandemic is clients are asking more of the why questions. Why do I want to do this thing? And how do I want to do it? Do I want to do it just for the sake of checking something off my list? Or do I want to do it because I want to share this experience with family members? In our group that we were just in, our little short group that Lindsay put us together, people in our group, a couple of people were talking about, really important family things that they had done. But the other thing that we're finding is that our clients are enjoying the simple things in life more. They're finding more pleasure in the really important aspects of life as they move through normal things like retirement or the death of a spouse or whatever it is. In other words, we just see our clients finding new meaning during their lives, during the pandemic, as we're able to help them move through whatever passage, whatever financial challenge they might be going through. So it's been very gratifying for us, but we also feel that it's been a wonderful thing to just watch our clients really grasp new levels of meaning in their lives. And again, why is this important? Well, it's important for its own sake, but it's also important because as we feel more put together emotionally and psychologically and understand the deeper things in our lives, we make better decisions about our money. And that means that we are able to make our resources be used in more meaningful ways and to last longer, in fact. So anyway, with that little piece about financial transitions, I'll turn the program over to Patrick to talk about more specific things that have to do with the economy and the markets during this very pivotal time in the markets and the economy. So Patrick?
Yeah, thanks, Catherine. Thanks for the introduction, and thanks everybody for your time today. I put together a few kind of short slides. I wanted to give a recap of what did 2020 look like, and then also kind of look into, what is our outlook for 2021 and the year to come. I put this chart up here. It's really interesting to see that we had both a bull and a bear market in the period of a few short months in 2020. Market fell about 35% peak to trough in March and quickly rebounded to finish the year positive, up almost 70% from that low. And really where we finished the year in 2020, we're kind of in an expensive territory. If you think about what did really well, it was a lot of the growth companies, the growth stocks, big cap technology did really well. And that really drove the market higher for the back half of the year and finished positive. But from a valuation perspective, things are looking pretty expensive. From an earnings viewpoint, we're at 22.3 times earnings, which is, it's higher than history. You have to go back to roughly March of 2000 to find a higher valuation number, similar to the dividend yields and cash flow numbers as well. So, while the market's done really well, up until this point, it's certainly getting a little bit expensive. Wanted to put a nice little breakdown of asset class returns. The gold bar is the S&P 500. The market finished the year last year up 18.5. Small cap and emerging markets actually outperformed the S&P, which not many people would realize. The bulk of that return from small cap and emerging markets came upon the vaccine news. So they really shot up, as those are companies that are tied to the more physical economy. They really shot up in the back half of the year, the fourth quarter in particular. Bonds, which is the other gold bar, finished the year up 7.5. That was on the back of falling interest rates. The 10-year Treasury ended the year just under 1%. And we'll get into kind of where it is now here shortly, but we're well off those lows. But that was the big driver of the positive return in the bond market. Commodities, as mostly driven by the price of oil, that whole complex was down about 3%. And I'm going to share an interesting viewpoint on the commodities complex here shortly. But that's kind of an outlook for 2020, broader assets. Sectors kind of hit on this a little bit already, but technology and anything that was tied to that online economy did phenomenally well. Technology was up 44, and consumer discretionary, mostly those online companies, did really well, up 33. Energy, on the other hand, fell completely off the map as everybody stopped traveling. Price of oil plummeted. Energy was down 34 for the year. So a very bifurcated market. And if you look at that spread between the top and the bottom sector, we had to go all the way back to 2000 to find a wider dispersion of returns in the market, which is a little bit unnerving to some people because, 98, 99, 2000 was a good top in the market, especially it was technology driven. But you had to go back all the way to 2000 to find a wider dispersion of returns between that top sector and the bottom sector. So 2020, certainly a little bit top heavy when it comes to the source of returns. So all of that leads me to kind of what does an outlook look like for 2020? And I always want to make sure that everybody understands that prediction is difficult, especially when it involves the future. Mark Twain said that the best. So anything that we share obviously is just a viewpoint, and outlooks are hard, as 2020 would have tried and tested anybody's outlook, but 2021 is also probably just as difficult. One of the areas that we're focusing on for our clients is biotechnology, and that was probably, if I drill down into kind of a micro sector, one of the better performing investments in 2020. But if I look at the outlook and the ramifications of what's going on, obviously with the vaccine rollout, it's the first kind of gene-based vaccine, but that's just the entry level to gene-based therapy. So these biotechnology companies should do phenomenally well or have the potential to do phenomenally well into the future, given the disruption going on in the traditional healthcare space. A lot of boomers are entering the retirement phase. That forces demand higher on the healthcare side of things as well. So we really like biotechnology over the course of the next 5 or 10 years. We think it's a great long-term play. Expect a lot of volatility, but really good place to be. Very positive on that as 2021 unfolds. The next piece, and this is something really interesting, and I know the graph is a little bit busy, but this looks at high frequency data. What is that? It's basically reservations on OpenTable, amount of people that pass through TSA checkpoints, hotel occupancy rates, very service-oriented data or service-driven economic data points. And what you saw was everything fell off the map in March of 2020. Everything was down, in some cases 100% as restaurants shut their doors. And we're seeing a steady improvement as whether that's the vaccine rollout or just, the infection rates are starting to drop. We think there's still a long way to go from a recovery standpoint. And it's going to be definitely split between, home mortgage applications is certainly on a rise. Consumers are still spending, but anything that involves that physical economy, like restaurant traffic, air travel, a lot of that's business driven too. And businesses are going to cut down on some of that as people migrate more to Zoom meetings. We certainly have done that. But some of those numbers might not get back up to where they were pre-COVID for years to come. Still going to look for improvement, but a lot of that big move in the recovery has certainly looked like it's happened. One of the interesting things that I think is important for everybody to factor in on the investment side is just what are interest rates doing? And we get this question a lot. You know, I said interest rates ended the year at about 1% on the 10-year. That number, if I look at it today, is right at 1.7%. So we've moved back almost a full percentage point back in the positive direction so far in 2021. But if I look back pre-COVID, you know, what were interest rates like back in 2013 or even earlier, 2019? And they were in that 2.5 to 3% range on the 10-year treasury. So it is not unlikely that interest rates continue to move further up from here. And that if you have exposure on the bond side, if you carry any type of duration, so interest rate risk, we think that's going to be a negative. If you look at the bond market year to date, it's down about 3.5 to 4%. And that's right on the back of a rise in interest rates. So we expect that interest rate curve to steepen further as the Fed has clearly said they're not doing anything on the front end. But we definitely think that back end will start to continue to drift higher as inflation outlooks resume, as the economy continues to improve, as growth works its way through. So definitely look out for higher interest rates in 2021. I want to mention inflation because obviously it's been very low for a long time, definitely under 2% for the past several years. But this is kind of that year that it might start to change. We think it might average 2, but the longer term outlook could bode higher for inflation. We don't think it's going back to the kind of 70s and 80s level. But inflation north of 2, kind of in that 3 to 4% range is certainly not unreasonable. Commodity prices are coming off of all-time lows. Housing demand is certainly shot up, as anybody has experienced. Home prices have certainly increased dramatically. As people begin to travel more, get back in to stores, restaurants, that's going to put demand on commodities. And I'll also add in here kind of the wild card, which is trade with China. If you have a supply chain disruption, any type of trade battles between the US and China could really hurt some of those supply chains and could put pressure on pricing and drive that higher. That would lead to higher inflation. And this is really that reason that interest rates are kind of moving a little bit higher. It's the anticipation of higher inflation. We still think it stays relatively low for 2021, but we're certainly on the lookout for it to continue to creep higher as the year progresses. Comment or further fleshing out that inflation point of view. We think commodities kind of make a comeback this year, and you're already starting to see a little bit of that. Most all of the commodities are below historic valuations outside of kind of that gold and silver complex. So if I look at oil and nat gas, agriculture, all of them are below averages. And we think that is kind of poised to reverse trend and work its way higher. And part of that is twofold. One, if you get more stimulus, which we don't think stimulus is over just yet. You know, we just passed the $1.9 trillion stimulus bill, and you're already starting to see headlines of a potential $3 trillion infrastructure bill begin to be put to work through Congress in the next month or two. So stimulus certainly isn't over, and that's on a global perspective too. I know the chart's very busy, but countries have averaged between 10 and 40% of GDP putting into stimulus measures since COVID. Those are really big numbers. It's really plugged the hole. But as stuff comes back online and stimulus is running hot, it should kind of bode well for that complex, for the commodity complex. The other aspect of the commodity move higher is really off of that green energy and infrastructure plan. You know, if you have a carbon tax credit, that could easily increase the cost of getting commodities out of the ground. That could lead to further pressures on the pricing of these commodities and drive those prices higher. Again, kind of bodes into the inflation narrative as well. So those are really kind of the 5 top themes that we're looking out for 2021. I realize that was really quick. Want to be very respectful of everybody's time, but also want to end on a note that says we try to keep a very long-term perspective. Anytime you invest, you gotta realize this is a long-term position for your money. And no matter what has happened in the past, whether it was world wars or inflation or a tech bubble, over decades, the market and the economy continue to grind higher. So while we're in this uncertain period of transition, as Katherine mentioned at the beginning, 20, 30 years from now, everything should look a lot better. Changes in biotechnology, changing in how we produce goods and services with more robotics in the manufacturing process. All that's going to lead to a better quality of life. History is a clear example of that. You've had wars, you've had inflation, and the economy continued to plow through it. So it's always important to keep a long-term perspective, especially coming out of a hard year like 2020. Don't make any rash decisions given short-term moves in the market. Try to keep that long-term perspective intact. With that, I'll pause for questions. I realize that was kind of a lot in a short amount of time, but happy to take questions and let you guys read through the disclosures. Clearly everybody's favorite thing to do, which is read through some legal disclosures, but yeah, happy to take questions. And if there aren't any, really appreciate everybody's time and good to see everybody again.
Okay, well, certainly, Mr. Bobbins, we appreciate that. And you're right, that was a lot of information that we're trying to digest. Let's see, okay. Anyway, we appreciate that program. And Katherine, thank you for bringing him on for us. We appreciate that.
Thanks for having us. We appreciate it.
Next week's meeting, we will have the organizations who have been awarded some grants, nonprofit program. The organizations who agreed to come will be presenting us their mission and telling us the project for which the grant was awarded. So that will be next week. Excuse me. And our invitation will be by Doran Swearingen. And can you tell me, am I saying your name wrong? Would you give me the correct pronunciation?
It's Duran.
Duran. Okay, Duran. Thank you. I appreciate that. So Duran Swearingen will be our invitation for next week. So if there are any announcements for the good of the club, please speak now. And if not, we will conclude with the 4-way test of the things we think, say, or do. Is it truth? Is it fair to all? Will it bring goodwill and better friendship? Will it be beneficial to all concerned? Thank all of you for joining us today, and we look forward to seeing you next week.
Bye.
Thank
you, Lou.
Bye. See everybody.
Bye-bye.
Thank you,
Kathy.
Oh, yeah, sure.
Thank you, Katherine. Please, I think Patrick already signed off. Please share